Hello, guys, and welcome back to the MD Investor channel where we talk about our personal finance in all aspects, setting goals, achieving goals, taking personal responsibility for our finance, increasing our financial IQ, teaching our children so we can break the cycle of generational poverty. If there's people out there you think can benefit from this information, let them know. Whether it's friends, family, colleagues, whoever it is, let them know that there's a place you can go to where people are learning and talking. We don't have an MBA, we don't have a CPA, however, but we're taking personal responsibility. We're reading and studying and taking action because nobody else is going to do it for us. So we got to do it for ourselves. New video today, guys. Continuing with our dividend portfolio tracker. We're going to do April 2020 dividends. April 2020, we got 7 checks. We started this portfolio in November 2019, and we've been doing a monthly update since then. So today is April 2020 checks. We got 7 checks, and let's get into it. The first check we got was on April 1st from Coca Cola, ticker symbol KO, for $4.13. We need no introduction to Coca Cola. We know it's the largest beverage company out there. Let's go to this website called Seeking Alpha. It's a great resource for research, and want to introduce you guys to it. It's a free. They have a paid subscription, but you don't need it. I don't use it. Coca Cola, ticker symbol KO. The Coca Cola Company, trading for about $45.60. Here's the quick snapshot over here. It's about in the middle of its 52-week range. 52-week low was $36.27. The high was about $60.13. It's about in the middle. The PE ratio, 24.1. We'll talk about that on another video. I know we've mentioned it before on dividend or investing terms you should know. I'm not going to get into it now. I'm going to do a separate video on some of these terms, okay? For now, we're going to get down to the yield. It's yielding 3.60%. And we say dividend yield is the total dividend you get per year divided by the share price. It's about a $195 billion company. So not only does it make Coca-Cola, but it also makes some non-carbonated stuff such as some iced teas. They also do Dasani water. It's a big company. Let's go on to the dividends tab here. So we see it pays about 41 cents per quarter. The dividend frequency is quarterly, so that's 4 times a year. So 41 cents times 4 will give you the annual payout of $1.64. You take $1.64 and divide that by $45.60, the share price, and you get a dividend yield of 3.60%. But I want to show you this. Go to the dividend history. Right now, it's listed for 5 years, right? But if you wanted to, you can go back for longer than that. So in, I guess June, maybe this is July of 2015. They're paying 33 cents. And then when they raised it, it was 35 cents. And it stayed 35 cents for 4 quarters. Usually these companies raise it once a year. Then 37 cents, 37 cents, 37 cents. Then it raised it to 39 cents. See that? Then it does 39 cents for 4 quarters, which is a year. Raised it again to 40 cents. Does that for 4 quarters. Then raised it again. So now we are in 2020 at 41 cents. But if you wanted to, you go back to a longer time period. Now this is what you want to see. See this here? It's about 2 cents in 1989. And now look at the dividend. There's a quarterly dividend, 4 cents. Now, is that cool or is that cool? So, look at the dividends going up 8 cents, 11 cents, 19, 20, 28, 30 cents. This is what you want to see, guys. If your dividend stays stagnant, inflation is going to eat it up. But what you're seeing here is ever increasing dividend. That's what they call dividend growth. Dividend growth. See that? Up, up, up and to the right. Okay, let's get back to the next check. We got paid on April 6th from Iron Mountain. Um, it's one company, but you got two checks. So $14.94. We've talked about Iron Mountain before. It's a REIT, real estate investment trust. You see the trucks driving by, and they're involving shredding and storage. We know there's a lot of companies that is everybody's in the cloud now. However, they also want hard copies. So this is where it comes in. So let's go to our portfolio to Iron Mountain, ticker symbol IRM. So IRM, Iron Mountain, trading about $27.82. It's about in the middle of a 52-week range. The dividend rate for the year is about $2.47, and the yield is about 8.9%. It's about an $8 billion company. Let's go under the dividends. So again, it's paying about $61. Correction, 61 cents per quarter. I wish you had paid $61. 61 cents per quarter. And it pays it quarterly. So times 4 would be $2.47 for the year. Divided by the share price, you got about an 8.9% yield. Now let's talk about the payout ratio for a while. We said, if you remember, maybe a long time ago, payout ratio is basically the amount of the amount of the dividend in regards to the earning, or saying that in a better way, companies make earnings, right? They're in business, make money. They have earnings, and you see a tab here for earnings. So they make earnings, and out of the earnings is where the dividend comes from, right? So a company makes a $1 in earnings, and they give out 50 cents or 50% of that in dividends, and then the other half it keeps for itself, so he can grow the business or whatever. Now, how can this be? He said the payout ratio is over 100%, greater than 100%. The company is paying out more in dividends than it's taking in revenue. How that? Well, there's the same reason where you could make $4,000 a month and you spend $4,500 a month. How's that possible? By taking on debt, by using your credit card, right? Same thing here. How can this company pay out more money than it's earning? By taking on debt. And we're going to get into all that stuff. We can go into financials and stuff. Like I said, Seek It Out is a great website for research. But this is not sustainable. Just like in your life, you can't continually spend more than you have. In a company's life, they also can't continually spend more than they make. So normally I like to see a dividend, a payout ratio 50, 60%. So obviously this is something that I'll have to look into. So let's go back to the M1 Finance. And our next check was from Realty Income on April 15th. Realty Income, April 15th, we got paid $3.03. Let's look at Realty Income. We've talked about Realty Income already many times. They are REIT. They pay about 23 cents a share. They're a monthly payer. They're about a 4.6% yield. So we'll move on. April 28th, we got paid from Bank of Nova Scotia. Total about $18.55. Right, two checks, $18.55. Ignore the red. That's when M1 sells off some fractional share that I have to pay off a portfolio loan that I have. That's why it's in red. So Bank of Nova Scotia, $18.55. So let's go look at that. BNS, Bank of Nova Scotia. Here we are. Bank of Nova Scotia trading about $43.02. 52-week low, $31.94. 52-week high, $58.22. Is lower than it's a good place to buy, right? Like I said, it was a buying opportunity created by this virus. The dividend yield about $2.69, and the yield about 6.25%. It's about a $52 billion company. Let's look under the dividends. So you paid about 67 cents. Paid it quarterly. So the total for a year is about $2.69 for a yield of about 6.25%. The payout ratio is about 70%. See that? So out of all the earnings they make, they pay out about 70% of that as dividend. They keep the other 30%. Okay. Let's see the next check we got on April 29th. Shaw Communications, which is a Canadian telecommunications company, almost like a Canadian AT&T. They paid us $1.80. They are a monthly payer. Let's go and look at SJR, Shaw Communications. SJR, Shaw Communications. Okay, so they are trading about $16.97 per share. 52-week low, $12.20. 52-week high, $20. So a good place to buy. They are paying about 87 cents for the year, and a yield about 5.1%, about $8.7 billion market cap. Let's look under the dividend tab. So 87 cents. 87 cents per year, and they pay monthly. They're a monthly payer. Okay? They're a monthly payer. So every month you get maybe about 7 cents. You take 87 cents divided by 12, you get about 7 cents every month. And that's your yield. And let's see the next payment. On the last day of April, we got 2 checks. Altria, ticker symbol MO, paid us $18.10. That's a cigarette company. $18.10. Let's go look at Altria, ticker symbol MO. Okay, ticker symbol MO, Altria Group, 39 trading, $39.13. 52-week low, $30.95. 52-week high, $52. So we're kind of in the middle. Lower half of them, lower, I guess a little below the middle. Dividend yield about 8.59%. The total dividend for the year is about $3.36, and they pay that quarterly. And it's about a $72 billion company. Let's look on the dividends. So we see they pay about 84 cents, and they pay this quarterly for about $3.36 for the year. And divided by the share price, you get a yield of about 8.5%. They pay out about 78% of the earnings in dividends. We got one last check on that same day from LTC, long-term care. We've talked about that before. Again, a monthly payer. Long-term care involved in the medical space, like senior housing and assisted living facility. LTC, let's find that. LTC, where are you? Here you are. Trading for about $37.62. About in the middle of a 52-week range. The dividend yield for the year is about $2.28. And the yield about 6%. Market cap 1.48, almost a $1.5 billion company. So you see the smaller company. Let's look at the dividends. So they pay monthly about 19 cents and it's monthly. Times 19 times 12, we give you about $2.28 for the year. Divided by the share price, you get about a 6% yield. They're paying out about 77% of their earnings in dividends. And if you look at the total of all of these checks, it comes to about $62.12. So $62.12 in dividends, cash flow passively that I didn't have to work for. It is like an acorn, very small, but all you need to do is put it in the ground, water it, and that acorn will become a mighty oak. So we are in the process of becoming an oak. We are being intentional. We are being aggressive. We are funding the account, and we are living below or trying to live below our means, so we can have money to invest, so we can continue to get passive income, so we don't have to depend on our job for 100% of our income. Right? We see what that does when any type of financial calamity or a health calamity comes up, or whether or just other stuff on what is out of your control. Your job is downsizing. They're moving to Mexico. They're hiring somebody else to do your job for less, and then they pay you. They're cost cutting. Whatever the reason is, the bottom line is you cannot allow yourself to be in such a vulnerable position where you have one source of income. Right? When they turn that stream off, you're gonna die. Think of somebody in the desert. If all the water you get comes to your job and they turn the faucet off, you're gonna die of thirst. You're gonna die of dehydration. But if you have water coming from other source, okay, you will. Your future self will thank you. So continue to be motivated, guys. Continue to read and study. Continue to take action. Continue to live below your means. Continue to get passive income, and we're gonna do this together and continue to break the cycle of generational poverty. If there's people out there you think could benefit from this, let them know about the MD Investor, and I will see you on the next one.